Hi traders, my name is Marco Meyer from Trading Educators and AlgoStrats.com, and today I'm going to talk about another common trading error, a very destructive one, and that is averaging into a losing position. Now this is not about averaging into a position or even averaging into a position that goes against you if it's part of your trading plan. So for example, you might have a mean reversion strategy that doesn't get into a position all at once, but instead averages into the position, which is completely fine. What I'm talking about today is averaging into a losing position without having a plan for it. So you average into a losing position just because it's a losing position and you don't want to take the loss. Now, this is one of the deadliest trading sins that I know, because usually this ends up in either a very big loss or you blowing up your whole account at some point. And the tricky thing about it is that a lot of the time you'll be lucky and the market is going to bail you out. So this is actually going to work quite often. But for sure, the day is going to come where it's not going to work, and then the consequences will be really drastic. And I can talk about this because I've done it myself in the past, especially during the first couple of years of trading, but also sometime later again, where it wasn't that deadly, but enough to lose a couple of months of trading profits because of that. So here's a quick example of what this could look like. This is the E-mini S&P 60-minute chart sometime in August last year. And let's say that for whatever reason we get along here, we buy the market at 2060. Market moves strongly against us. And now we take out our stop loss wherever it has been and do what we shouldn't do, and that is buy another position. So at this point we are already down about $600, and let's say our initially planned risk was $1,000. So now we're long two contracts against the plan without a stop loss in the market anymore. And of course what has to happen happens, and the market continues to move against us. So at this point we decide to put on another position and just hope that we'll be lucky and the market's going to bail us out. So we're going to put in a profit target order at this price here. Let's say 2054, which should be around the average of the three, maybe with a little profit, and we are lucky and the market hits it. So this time we got saved by the market. We've been lucky, we get out with no loss at least, while taking a really big risk for doing so, just to not having to take that initial loss. So on the next day, we do the same thing again. Market's down here, we decide to go long. All fine so far, maybe with a stop loss below the lows here. But the market moves against us. We take out our stop loss and do the same thing again, hoping it's going to work. Buying down here 2000, we think maybe the market can't go below 2000 too much. So we go long, but the market continues to move lower. So now we just pray and hope market's going to move higher again, but it doesn't. It continues to move lower very strongly. And at this point we go all crazy and say, okay, I'm going to buy another contract here, just hoping it's going to get up here again so I can get out at break even. And at this point, let's say the account is already getting in trouble, but unfortunately market continues to move against us. And now our trader buys another contract at 1900, while already being down $6,000 from the first trade, another 4,500 from the second, and another 2,700 from this one. So we're talking about a loss of about $13,000 instead of the initial risk of 1,000, which is 13 times as much. And at this point, the trader just can't get out anymore because it would be so disastrous, he can't accept it. So he's going to stay in and just pray and hope market's going to come back and he can get out somehow. And the market bounces a bit here, but on the next day, it moves down very violently. And somewhere down here, the margin call comes in, the trades are getting closed automatically, and the trader's blown up his account. And of course, if you look at that move, something like this almost never happens. If you look on the daily price chart, this almost never happens within such a short period of time. So this is going to work well most of the time, right? But again, the day's gonna come where it won't, and this is when you're gonna blow up your account. So never ever average into a losing trade. Alright, so thanks for watching. If you didn't do so, you can subscribe to our YouTube channel right here at the bottom right. Go check out our website at tradingeducators.com, and if you didn't do so already, go ahead, check out algostrats.com, which is my new project focused on algorithmic trading strategies. You can already sign up to a newsletter there and check it out, and of course follow me on Twitter and Facebook. So see you next time. Until then, take care.